Well, Vinod, it's really nice to be here in Amsterdam and seeing you in person again. This event that KPMG in the Netherlands is holding is a fantastic event with more than 150 clients talking about a whole lot of things. And I know you've been talking to many clients about what's going on in the EU in terms of really innovating around tax. Talk to me a bit about that.
Well, Rodney, in principle, taxation falls under the European mandate under the heading of unanimity.
Mm-hmm.
It means that you need 27 EU member states all voting in favor of a certain initiative, and then it becomes law, like the EU Pillar 2 directive. But what you now see more and more happening is that the European Commission, supported by some of the larger member states like Germany, France, Italy and Spain, to circumvent the unanimity rule and place an EU initiative under a different heading on the EU Council agenda. Just to give you one example, the EU solidarity levy with taxation of excess profit of the energy sector has been based on qualified majority voting. EU public country-by-country reporting has been based on a qualified majority voting. So we see more and more of these examples occurring on the EU agenda.
That's really interesting because I can only imagine historically it must have been difficult to get all 27 countries to agree to something, whereas if you can get to qualified majority, that makes it a lot easier to make changes.
That's correct, and some have even argued that this is undermining the fiscal sovereignty of the individual EU member states. But to date, the larger member states have been successful, with support by the European Commission, to go down this innovative route.
So that's really interesting. Talking about innovation, I also heard you talking to folk about incentives. So tell me about your perspective about that.
On incentives, everybody is now focusing on making corporate tax incentives compliant to the Pillar 2 rules.
Mm-hmm.
But that to me is only one part of the story. At the same time, we see a certain tax competition occurring in the field of green transition incentives. The United States Inflation Reduction Act opened the door for this competition by allowing very generous tax incentives for a green transition, and some of the German car manufacturing industries and other industries that are in the field of, for example, battery production for electric vehicles have threatened the EU that they would leave the EU and set up their production hub in the US or in Canada, and therefore have urged the European Commission to take action. And just recently, 9th of March this year, the European Commission came out with a public statement and guidance how EU member states were allowed to give tax incentives in this green transition to, for example, develop batteries in the EU and not run foul with EU state aid rules. So this relaxation of the state aid rules, again, is highly innovative and creates tax competition.
So that's really interesting because that really is a sea change from the past. Now, you were mentioning green, so let me end by asking you about corporate sustainability reporting, which is on the green agenda too. What's going on there?
Yeah, the European Union again has taken the front-runner role in corporate sustainability reporting. Last year, they adopted a directive, and that directive will focus on first financial year 2024. There are a large group of companies in scope, not only EU headquartered, but also US headquartered. And currently, if you read the directive, it focuses on environmental issues, social issues, and governance of multinational enterprises. Tax is not mentioned, but there is a door in that directive that opens the development of European sustainability reporting standards by the European Commission and stakeholders. And I would assume that the GRI 207 standard at some point will be dragged into the net of this sustainability reporting standard, I would say in the next 5 to 10 years.
So that's a really watch this space.
Very much.
Well, gosh, Vinod, no wonder you're spending so much time talking to clients about this. There is a lot going on within the EU that's quite substantially different to what we've seen in the past. Thank you for your time today.
My pleasure.